Okay. So hello everyone. Welcome to RBI circular session for May 2026 part 3. And these circulars can be asked in your either of examination, that is RBI examination or SEBI examination. And my name is Davinder and I'm your finance mentor. I used to teach finance related news or RBI related circulars to you. Right? So we are currently doing part 3 of circulars for the RBI. Right? For the May of month. Right? Yes. Good morning, Priya. Good morning, Vineet. Welcome to session. So I hope my audio and video is fine to all of you. Let's just talk about little bit about this May 2026 RBI circular. RBI circulars में पार्ट 3 में हमारे पास ज्यादा नंबर ऑफ सर्कुलर्स नहीं है, बहुत ही कम सर्कुलर्स हैं. So we have only 3 circulars to be discussed in this. The same 3 circulars I have discussed in my finance current affairs as well, right? तो अगर आप फाइनेंस करंट अफेयर सीरीज नहीं फॉलो करते तो यू कैन फॉलो दिस वन. तो यहाँ पर भी आरबीआई सर्कुलर्स फॉलो होते हैं और कवर किए जाते हैं. सो लेट्स जस्ट डिस्कस दोस सर्कुलर्स इन डिटेल ताकि आपको अच्छे से समझ में आ जाए दैट व्हाट एग्जैक्टली दीज आर. ठीक है. आई होप एवरीथिंग इज फाइन. आई होप एवरीथिंग इज क्लियर टू ऑल ऑफ यू. राइट. चलिए. I believe everything is fine. I have checked it from my end. Let's just discuss. So in this, we have these 3 news with us, or we can say RBI circulars with us. So one is that RBI set up a committee for QSafe. A QSafe is a economy that RBI wants to build, और उसके लिए committee create की गई है by the RBI. After that, there is one regulation which has been finalized by the RBI. Saying that we are going to have a cooling off period for the directors of the cooperative bank. And then after that, a 623rd meeting of the Central Board of RBI was held, and in which they disclosed that how much money they are going to share with the government of India. These are the main basic news, and these are the main basic circulars which we have for the period of 23rd May to 29 May. ठीक है. 23rd 29 May से this is what we have as of now. ठीक है. इससे पहले वाला देखेंगे और भी रेंज में है हमारे पास मे के सर्कुलर्स, एंड देन पार्ट 1. ठीक है. पार्ट 1, पार्ट 2 एंड नाउ वी हैव पार्ट 3. So let's just discuss first. We can say circular here. ठीक है. So first of all, RBI had a concern. Before we talk about the committee, RBI have some concern. They have some issue that whether our data, whatever data that we are keeping with ourselves or at the banking system, is it safe or not, right? Because generally what happens that banks have encrypted their all data points in a token or in a cryptography. In a cryptography. That is, that they have converted the actual data into a mathematical expression, which is not readable by any of the hackers. Even if they got this token, they will not get anything in their hand. The actual documents or actual information of the customers will not be available to these hackers. So what are these? The data points of the customers are being converted into a mathematical expression, such like this. So you can see that this particular expression is not readable. This is simply a code which is being created by a bank saying that this particular data is being verified by the bank for the customers. Now this has been cryptography. Cryptography में इसे convert किया हुआ, that is it has been encoded. It has been encoded into a token or a, we can say किसी data point में किसी code में इन्होंने convert कर दिया. And this is how the banks are trying to save their data from the hackers. But now what we have that we are having a quantum computers now, which is the advanced technology. This advanced technology is so fast that they can crack this code, right? They are that much intelligent or smart in nature. And they can crack the existing encrypted method which is being used by the banks currently. They can break the digital security system as well, and they can get, we can say, accessibility to the sensitive data of the Indian banking system and the customer also. And thus, this have created a fear in the RBI, saying that these quantum technology is going to make our financial data even more riskier. इसीलिए we have to make sure that our Indian financial system should be quantum safe. Our Indian financial system should be quantum safe. And this is what the RBI concern is. Considering this concern, so let's just talk about QSafe. QSafe means Quantum Secure and Adaptive Financial Ecosystem. QSafe is a ecosystem which is being created, which is going to be created by the RBI, saying that our financial system is that much secure and adaptive as per the current quantum technological level. So as per the quantum technological level, our ecosystem is secure and adaptive as well, right? So that kind of ecosystem they want to create, so that banks do not get hampered with the new technology, whatever is it has been coming, right? So quantum is a technology that uses the rules of quantum physics, and they build extremely powerful computers. These powerful computers are able to solve problems much faster than your normal computers, and that is the fearing point. So what have RBI done? That RBI have created a committee, an expert committee, which is going to work and see that how our Indian banking are currently doing. That means how our Indian banking are currently encrypting their data, what kind of processes that they are following, or what kind of technology that they are following in order to record the data point, any kind of data point, or whether these are ready, are these banks ready for the quantum technology or not? This is what the question is. And this expert committee is going to work on that. So you need to understand that QSafe is an ecosystem that RBI is going to build in the Indian banking system or the entire financial system. And for that, they have created a committee. Who is the chairperson of the committee? The chairperson and who is going to be the head of the committee is the Dr. Anil Prabhakar, who is the professor and is one of the person who works in the Department of Electronic Engineering, IIT Madras, right? So he is the one who is going to be the convener, right? Apart from Dr. Anil Prabhakar, who is going to work under these, so Shri Sunil Kumar, which is, we can say, one of the additional secretary in Department of Science and Technology in Government of India. Shri Satish Rao Nagesh, which is the Deputy Managing Director of State Bank of India. Shri Dilip Aspe, which is the National Payment Corporation of India's CEO, and Shri Manoj Kumar Jain, who is the, we can say, Group Coordinator of MITI, Ministry of Electronic and Information Technology. Then Shri Vinayak Godse, which is the CEO of Data Security Council of India. DL Vikanta Subramaniam, who is a, we can say, Quantum India Servant Leader in ex-IBM Quantum India. And then Shri Suvendu Pati, CGM of FinTech Department. So what you need to remember, you cannot remember all of their names. So what you need to do is that you can simply remember the convener, or we can say the head of the committee, right? Because the head of the committee can be asked in the examination, and their name and what exactly they do, right? You can remember this thing. Apart from this, you can remember this thing, that FinTech Department of the RBI is also supporting the expert committee in realizing that what exactly is the current scenario of the Indian banking system in terms of technology, right? So they are also going to provide the support to the committee. Okay, so these are the all things. Now, we also need to understand what exactly is the role and responsibility of the committee. So these are being listed in the next slide. So what is the purpose of the committee? What they are going to do? So they are going to study that how the quantum technology will affect the Indian banking and financial sector. That how it is going to affect if the quantum technology comes in India. So how it's going to affect in a good way also or in a bad way also. They are going to analyze both of the ways. So first of all, what they are going to do? They are going to evaluate the potential benefits. The potential benefits, the risk, challenges in the financial sector. whatever is the current level of the financial sector, if the quantum technology comes, what are the benefit, positive impact of that, and what is the negative impact of that? All kind of challenges, risks, and benefits will be analyzed and evaluated by the expert committee. Apart from this, they will also evaluate the financial sector's cryptographic inventory. That means the database which has been collected by the banks or by the financial institution over the period of time, and they have encrypted that into a cryptographic. ठीक है, तो वो जो क्रिप्टोग्राफिक इन्वेंटरी है यानी कि इंक्रिप्टेड डेटा है, उसे क्या करेंगे, उसे एनालाइज करेंगे, उसे इवेल्युएट करेंगे, जिसको क्या कह रहे हैं, क्रिप्टोग्राफिक बिल ऑफ मटेरियल्स. ठीक है, ये एक ऐसा बिल है जो अलाउ करेगा टू एक्सपर्ट कमेटी टू इवेल्युएट इट, टू रीड इट, ताकि वो उसके ऊपर काम कर सके. एंड देन दे विल असेस द क्रिप्टो एजिलिटी. इसका क्या मतलब है, दैट वेदर it is going to be very difficult for us to adopt the quantum technology or whether it is going to be very easy to adopt the technology. So हमारा current level जो भी है, अगर वहां से हमें quantum technology की तरफ move करना है, is it very easy for our Indian banking system to adopt that or it is going to be very चैलेंजिंग. मान लीजिए हमारी बैंकिंग सिस्टम के पास ऐसा टेक्नोलॉजी, ऐसा कंप्यूटर और ऐसा डेटाबेस ही नहीं है to adopt that higher level of quantum technology. So that will be assessed by this. They will see what is happening in the international countries, right? Global practices क्या है? They will study that. Industry preparedness कितनी है? Is my industry prepared enough for that risk? That will be checked, and they will recommend a roadmap or a framework that is to be adopted in a timely manner, and the implementation strategy will also be suggested by this expert committee. तो ये expert committee क्या create करेगी? Policy create करेगी, rules create करेगी for the bank for the adoption of quantum technology, और उसका timeliness भी बताएगी कि कितने time तक we need to adopt it, and इसकी क्या implementation strategy होनी चाहिए. Everything will be told by the expert committee here. This is what they have created it for recommendation. Okay. Okay. So this was all about their first circular. Now here we are with the second circular, okay, which is talking about the cooling off period for the directors of cooperative banks. Now when we talk about cooperative banks, right, when we talk about cooperative banks, it means that we are talking about urban cooperative banks, we are talking about rural cooperative banks, and in rural cooperative banks, we are also talking about central level cooperative banks and state level cooperative banks. So on all these cooperative banks, this particular direction is being followed or implemented. What is the meaning of cooling off period, ma'am? The cooling off period means that break. It's a break period. Say you are serving, you are a director of a cooperative bank. Now you are serving to a cooperative bank for 10 years, for continuous 10 years. Now RBI says that you cannot serve a particular urban cooperative bank more than 10 years. So the maximum that you can serve as a single director in a same cooperative bank, it would be 10 years, right? Not more than this. And if you really want to work with the same urban cooperative bank again, after completing the 10 years of period, you must take a break of 3 years. You must take a break of 3 years. They are calling this break as a cooling off period. And then after that, you can continue with your job again. That is for next maximum of 10 years. You can again serve the same cooperative bank as the director who used to work earlier in that particular cooperative bank. Right? So this is what the direction is all about. But we need to understand that what was the earlier thing that they have changed to. So we need to understand that. So basically a final amendment has been made by the RBI in cooperative banks, especially in the urban cooperative bank direction and in the rural cooperative banks direction, which is governance amendment. Okay. So this law fix the maximum limit of how long a director can continue with a bank board, because director is performing where? At the highest level, at the top level, which is at the bank board. The bank board is responsible for setting the limits for the bank. They are also responsible for setting the strategies for the bank. They are also responsible for setting the goals for the bank, right? Goals and targets. So they are very important because they are regulating or they are controlling the entire banking system. There is a period, a maximum period, an independent director can work on that, right? So longer period of tenure, continuous period is being avoided here so that we can safeguard the cooperative bank, right? So that the individual or the director do not make biased decision towards the cooperative bank, right? So that break is very important so that a new person comes within that break and changes and looks after the cooperative bank from a different vision. Because new people come, they bring new ideas, they bring new, we can say, thought processes. They also bring, we can say, they have a different way of looking at things, right? So that break is ensuring this there. So what used to happen earlier? So earlier, in one of the directions, the RBI said that we are going to increase the director service period from maximum of 8 years to 10 years. This was changed in 2025 with an amendment. But what happened? That there was no rule. There was no rule for break period. That means even if there is a rule for break period, that was not strict. Ma'am, how? Suppose that the 10 years of period, the maximum they can serve. So they used to serve 10 years of period, and after that, just for a technical satisfaction of the rules, they are taking a break of say 2 months. They are taking a break of say 1 year. And then after that, they are again joining the 10 year of service to that particular urban cooperative bank. Now, what was the problem? The problem was that they were bypassing the rule. And even if they are taking the break, that break is too short to ensure the independence decision making in the urban cooperative bank. So they quickly get re-elected or co-opted to the same company, to the same board. And they used to resign for a very shorter period of time, which was not effective as per the rules. So they have created a rule wherein they said the new rule is that the 10 continuous years you can serve in, we can say in a cooperative bank, and you cannot immediately return to same board. You have to take a minimum break of 3 years, right? So that is being said here. Now there are new two rules. If the break is less than 3 years, that means you have served say 1 year of break or 2 year of break or less than 3 years of break, right? If that is the case, then we will believe or we will assume that you have continuously served the 10 years plus the extended years that you have done. For example, you served the 10 years. After that, you take a break of say 2 years, which is less than 3 years, and then you continued for 5 years. So how will they ascertain the value of your total serving period? They will say 10 plus 2 plus 5. This comes out to be 17 years. That means you have served 17 years to the urban cooperative bank. Now penalty will be applicable on you because you have continuously served 17 years in one cooperative bank. So that is what they are saying, that we will consume, that is the service was continued. If the break is for more than 3 years, the old tenure will not be counted. The old tenure will not be counted, and we will say that now you are serving from 5 years old. That's it. So this is all about your second news. Let's see, do you have any doubts or not? Do you have any doubts or not? Who is convener? Convener is the person or the person who is responsible for organizing and calling the people together, right? They held the meeting, they held the committee, they organize a particular body. They are the one. They are simply one of the head or chairperson of the committee, right? I even used a different word as well for the same. Okay, Vinny? Okay. Let me see if it, yes, now it's good. Yes, here we are with the third very important circular of the RBI. It says RBI's central board approves 2.87 lakh crore surplus transfer to the government. Now what happened? See, RBI is also a organization. It is an organization, right? And it does various kind of business because it also takes care of the banks. It also earns some income from the penalty, right? From the fees that they charge to the bank, some charges that they charge for the bank, and they also get some benefit or income from the we can say government security sometimes, and they also get earning from the stock market, right? So all such things allow RBI to earn some profit, right? Now this profit is divided into two categories. RBI keeps some profit with themselves for the emergency situation, right? Whatever is required for the emergency situation, the RBI is going to keep that part of profit. And the leftover part of the profit is being shared with the government of India. It is being transferred to the government of India. Government of India keeps that surplus or that money with themselves as a non-tax revenue because this is a revenue that government have earned not from the taxes but from other means like RBI, right? So non-tax revenue is this. And this was decided that how much dividend they are going to share to the government. This was decided in their 623rd meeting of the Central Board of Directors, RBI, right? And who chaired the board meeting? It was chaired by the RBI governor. So board apart from just deciding that how much money we are going to transfer to the government of India, they also decided all other things. They also reviewed many of the other things, right? They decided what is the global and the domestic economic situation. Are we stable enough or not? These kind of things are being looked around. And they also see the risk affecting the economic outlook. What are the risks which may hamper our economy or the global as a whole, right? Globe as a whole. So these are things are also being seen by or reviewed by the central board. Then finally, they made the annual accounts of the financial year 26. So annual accounts here means that they were working on the annual report of the RBI, wherein all the data related to RBI, related to bank, related to RBI's balance sheet, all such things are being released here. Right now, the RBI's annual report is not yet released, but they have finalized few of the things in the well in advance. Okay, in this central board. So we need to discuss that what they have changed and what they have managed. So there are some data points for all of you to remember. Now there are going to be huge data points. So I want you to remember it and revisit it again and again so that you can remember it. In one single go, you will not be able to remember it, but you have to revise it again and again so that you can retain these information for a longer period of time or at least till your examination. So first of all, the gross income, the total income that RBI have earned, it is increased by 26.42%. Whatever was the previous level of surplus or the income over and above it, the RBI have earned 26.42% more than the previous income. So this is what they have said, that our income have increased by 26.42%. The expenditure before the risk provision, right? The expenditure that they have done, whatever expenditure, any kind of we can say spending that they have done as a central bank, such kind of expenditure stands at 27.60% more than the previous year. So this is before the provision. Provisions are also being maintained by the RBI for various kind of risk scenario because they are also dealing in the stock market. So any kind of risk which is coming from that market or in the banking market, they keep provision for that also, right? So before maintaining the provision, whatever spendings that they spent on that was increased. So their spending also increased as comparison to their total income or gross income. And their net income, they give the absolute term or absolute number here, how much income they have earned, net income. So that is 3,95,972.10 crore. And in the previous year, how much they have earned? In the previous year, how much they have earned? They have earned 3,13,455.77 crore in the financial year 25. And this was related to financial year 26. And this is what you need to remember. The size of the balance sheet. See, what is the balance sheet? If I talk about balance sheet, your balance sheet looks like this, right? It tells all the assets as of March 2026. That means at this point of time, what was the level of my assets? What was the level of my all liabilities, right? So liabilities and assets, whatever is their total, that is the size of balance sheet. That is the size of RBI as well, right? So RBI's balance sheet has been extended by 20.61%. They said that our size of balance sheet have also improved by 20.61%, which have reached to what? Which have reached to 91,97,121.08 crore. Now these numbers are very important. So write it somewhere, right? These are going to be important. Then there is a contingency risk buffer. This is a risk buffer. That means RBI also considers that future is uncertain. What is going to happen in future? Even you are not aware of it. Just like that, RBI is also uncertain about the futuristic situations, right? So as the future is uncertain, they said that I'm going to keep money well in advance with myself, the emergency funds, so that if something went wrong in the future, I have enough money in my hand to take care of that emergency situation. So that is the reason there is a contingency risk buffer, a buffer which is being maintained by the RBI. And in what range it is being maintained? It is maintained between 4.5% to 7.5% of RBI's balance sheet. So whatever is the RBI's balance sheet size, within this range, the RBI maintains a certain percentage of the RBI balance sheet as a contingent risk buffer. And ma'am, how much they have reserved? How much they have maintained? So everyone, they have maintained this time 6.5%, which is more than the previous year, right? Previous year, they just maintained only 44,861 crore. But this time they have kept 1,09,379.64 crore, which is much more higher than the previous year. So this is for the financial year 26. Right? You have to remember this range. This range is very important. The range and what they have maintained as of now and what is the absolute amount. This can be asked in your examination. Right? Apart from this, yes, we have covered all such things. Okay. Apart from this, let's just have a background of the ECF. Now, what is ECF? ECF, which is the Economic Capital Framework. This is a framework of the RBI which guides the RBI that how you should distribute your surplus. Whatever income that you have earned, this economic capital framework decides and guides the RBI that how you need to distribute your surplus. As I told you that your surplus, the RBI surplus is being divided into two categories. The extra surplus is being shared with the government and the remaining, or we can say the some of the funds are being kept as a CRB, that is contingency risk buffer for the emergency situation. So this is what the division looks like. And who recommended this framework? Who created this framework? So Bimal Jalan Committee recommended. They recommended that there should be adequate capital buffer that should be maintained by the RBI, and then the excess surplus can be transferred to the government. So RBI surplus transfer is an important source of non-tax revenue for the government of India. It supports their fiscal management. Obviously, when government gets extra income from the RBI, right? Because RBI is going to earn the surplus and surplus is being transferred to the government, our government can use that fund for various kind of projects, right? They can improve their budget, right? They can improve their fiscal deficit position. They can improve the, we can say, situation and infrastructure level of the economy. So all such thing can be done, right? So how much they are transferring? They are transferring 2.87 lakh crore rupees to the government. I hope you have got everything about this RBI surplus. So we are done with the three RBI surplus. If you are finding a particular pack for the many other regulatory body examinations, then this is a super pack for you. That is regulatory body exam super pack, which is available for all of you at 6,499. If you want to get this at the lowest price of 6,499, you will apply that code which is being written on the screen, which is DAVI to get this discount. And this is my Telegram group. You can follow this Telegram group. Again, this is for the advice that you need from me, right? And in this particular group, you will also find one more group wherein users are being allowed to communicate with me. So you can follow this group and you will be able to follow that group also. And this is the winner's batch. If you are looking for a crash course for the 2026 examination of RBI, you can follow this. You can follow this. You can buy this particular vacancy course wherein everything is available at one place along with the mentorship of the officer. Officer is a ex-CGM RBI, right, officer, and they will guide you for the examination as well. So that is also going to be very helpful for all of you. So thank you everyone. So I hope you have enjoyed the session. I hope the session is also fruitful for all of you, right? So with this, we are ending our session. Goodbye everyone.